Hey traders, Raghee here, and in this recap video we're going to cover crude oil, the daily chart of crude. Now we've rolled into the March contract, so make note of that. We just rolled from February to March last week, and so you'll notice I'm looking at the March contract, the H contract. So a couple things have formed as of this morning, and one of the things that's formed is the Darvis. Now a couple things about the current Darvis that's on this chart. Here's the high. Here's the low. Now, the question I ask myself is the width of this Darvis narrower than most of the other Darvises on this chart? And I'd have to say it's probably amongst the first or second narrowest. This is probably the first narrowest. This would be the second. So yeah, it does meet that narrow Darvis criteria. So that narrow Darvis does help. So that's just narrow Darvis. All right, so what does a narrow Darvis mean? It means that there's the potential for a momentum play through the top of the resistance of the box, which right now is sitting at 64.84. So there's a couple levels that I want to make note of on this chart, 64.84 being one of them, and the other one would have been Friday's low at 62.78. So those are the two levels that I'm taking note of. Now, what I want to see ideally, because I would prefer to buy exhaustion, which is to say I would prefer to buy support. That means the 13 or 21 EMAs, even down to the 34. But this level would be the most aggressive, this 13 EMA plus the Darvis. That would be an aggressive buy. There's a couple things we could do here. Here, I could just get long calls, or I could actually buy the 62.85 area. But quite frankly, we do have two propulsion dots. Now, if I had had more, if this was maybe the fifth or sixth propulsion dot that we had, I'd say let's go ahead and look for not just a momentum buy, but also for the more aggressive buy. But since we only have two, I know the market's just kind of getting its foot back on the gas pedal, which is fine. I just know that the market's capable of then trading down to this area around 61 or 61.85. So I use the word calibrate. I want you to calibrate your expectations for the potential that we could get down to this area or this area, and as long as we're above 51, so I really want to stay above 50.95. As long as we're above that 50.95, this is still very much a buy market. Now, the next step is to take the daily price movement range, and that's going to be every morning taking the new high, whatever that may be, taking the high and subtracting approximately $1.40 to $1.35 from that high, and then you get a price. That price could be what we call the daily price movement range low projection. So if you can project with the daily price movement range, that'll give you a pretty good zone to think about either buying those calls or parking your limit order to buy, because at that level it's much more exhaustive. All right, gang, that is the recap. Again, this is the CLH contract, the March contract, and we're looking to get long to follow the overall and I think quite intact trend on this market.